All right. Hey, everybody. Good morning. I am Paul Moore, and I'm so glad to be here with you today. Let me know if you can hear me. I'm live here on YouTube Live, Facebook Live, and Bigger Pockets Live. And I think you can hear me, but I just want to make sure. I've been wrong before. So let me mute the speakers. So welcome everybody, I'm Paul Moore, and today I'm going to talk about my real estate investing strategy for 2019. So thank you for joining. Tell me where you're from. Tell me what you do. Hey, thanks Melissa. Tell me where you're from, tell me what you do, and get ready to ask some questions, because this is going to mainly be a Q&A time where you can ask anything. Hey, Colette from Colorado. Hey, Melissa, Nicole. Something, okay? Hey, we are going to talk about my real estate investing strategy for 2019, and then we're going to talk about yours. So be ready to ask some questions, be ready to comment, be ready to have some fun. Hey, woodchuck chuckers, it's Groundhog Day. Who's watched the movie? Give me a thumbs up, heart, like, share. If you like Groundhog Day, my wife and I watched it last night about midnight, and that's how we ring in Groundhog Day every year. We've been doing it for about 20 years, maybe 25 since the movie came out, so it is Groundhog Day. Hey, did the groundhog see the sun where you are? Because he certainly did here, which means 6 more weeks of winter in Virginia. No surprise. I think that the groundhog has only not seen its shadow. Yeah, Vinny, he's a legend. I think the groundhog has not seen its shadow like 17 times out of the last 140 years. So Punxsutawney, PA, hats off to you guys. I hope spring is in the air, Daniel. See, Kelly, what about real estate? Okay, great. Hey, I agree. We're going to talk about real estate, but it is Groundhog Day, and I wanted to acknowledge that. And so let's talk about my real estate investing strategy for 2019. So you guys might know that I'm a multifamily author. I wrote a book called The Perfect Investment. And The Perfect Investment is a book about multifamily investing, because when I discovered multifamily investing, I thought it was the greatest thing in the world. And I still think it is amazing. And so it's got an incredible balance of risk, return, stability, and it is an awesome tool to grow wealth. Some of the wealthiest people I know have been investing in multifamily for years. And you probably knew that most of the Forbes 400 has invested in commercial real estate and continues to. And when you see the tax benefits of commercial real estate investing and real estate investing in general, it's second only to oil and gas. But there's one big difference. Oil and gas has massive risk, a lot of it does, that you don't find in commercial real estate. So if you're investing in commercial real estate, you're here on Bigger Pockets, you are in the right place to save on taxes, to get a stable, predictable, weather the stormable, is that a word? Portfolio that you can take into retirement and pass along to multiple generations. There's so many things we could say about the amazing benefits of investing in commercial real estate. So here's what I'm going to ask. If you can save up your questions, if you're on the Facebook side, I'm getting a few questions. And I would say it would be best if you hold off on the Facebook side, and on the Bigger Pockets side, I can get the Bigger Pockets and the YouTube side, I can get all of your questions answered, hopefully before we're done here. But my real estate investing strategy for 2019 consists of a lot of due diligence, a lot of diversification, and a lot of investing in assets that are protected from the downside. So here's what we're going to do this year. My company's called Wellings Capital, and we are interviewing and vetting sponsors in several asset classes. I'm looking for asset classes that are protected from a potential downturn. Now, a lot of people think there is a downturn coming. There's signs of it in California already. The ice is kind of cracking around LA. I noticed when I was out there in March, there were hardly any for sale signs all around Beverly Hills where I was staying. but there's a lot of for sale signs there now. So I think if it's true that what happens in California spreads across the rest of the country, it's likely that we're going to see some type of downturn where, interest rates are already on the rise. It concerns me that cap rates are not expanding along with interest rates. And so some people think that's going to lead to some significant problems in commercial and residential real estate. There's issues in New York, there's issues in LA, San Francisco, real estate spending a longer time on the market. And so I think that there's a potential for a downturn. So I'm looking for asset classes that are ready to weather a downturn. So one are mobile home parks. Okay, mobile home parks are amazing because they're the only asset class I know of that's actually contracting. They're getting a smaller supply every year, but an increase in demand. Did you know there's 10,000 people a day turning 65 years old? Those 10,000 people are going to need a place to live. And so a lot of them I think a third of them have zero saved, and like half have less than 10,000, but a lot of them have home equity. And so a lot of them are turning to mobile home parks where they can get a $300, $400 a month lot rent, and they can bring in a trailer or a mobile home that costs maybe $5,000, $10,000 used, maybe $20,000, $40,000 new. And so a lot of people are turning to mobile homes. There's a lot more lower paying jobs in the U.S. So mobile home park demand is actually on the rise. At the same time, the supply is falling, and that's absolutely documented. 99% of mobile homes are owned, they believe, by non-institutionals. So that's mom and pop owners. 99%. A lot of them are run passively, and some are run flat out poorly. So there's many amazing opportunities in the mobile homes park space. I did an analysis the other day about the tax savings of mobile home parks. 70% of a typical mobile home park can be depreciated over 15 years. But that means under the new tax law, it can be all that the 15-year depreciation. It's called bonus depreciation under the new tax law. It can be actually depreciated in 1 year, 70%. So if you buy a mobile home park for $2 million, $1.4 million can theoretically be depreciated, written off in 1 year. But even if it's 15 years straight line, it's a really good deal. But 1 year makes it an incredible deal, and then you can carry those tax benefits, those tax savings over year to year. Talk to your tax advisor. I am not one, but it is pretty amazing. Another asset class that is wonderful is self-storage. Now, when people downsized during the Great Recession, they were turning to self-storage because they didn't want to get rid of their junk. I mean, their treasures is what I meant to say, of course. And they turned to self-storage. People in 4,000 square foot houses were downsizing to 2,000. 2,000 were downsizing to apartments. People move. People are in the military. People have older generation parents who pass away, and they need a place to store their stuff. And that's not going to change. The great thing is if I threw you a 6% increase if you were in my apartment, you may leave for that $60 a month on a $1,000 apartment. If you are in a $100 storage unit and I increase your rate by 6%, you're probably not going to take a Saturday, pack up a rented U-Haul, and move your stuff down the road to save $6 a month, especially because you believe you're only going to be there a few more months anyway. Most people do. It's not the case. Most people stay a long time. It keeps hitting their credit card. So self-storage is a great asset class to be in. Multifamily is a third one. Multifamily did amazing during the last recession. You know, the foreclosure rate in large multifamily was only 1/10 as high as Freddie Mac single-family home foreclosures, and now it's only 2%. No, 0.2%, I believe, of the foreclosure rate of homes now that we're back in a boom economy. So multifamily is a great place to be if you can afford it. Very hard to get in right now. High competition. 93% of multifamily over 50 units are owned by institutions or groups that own a lot of assets. So what my company, Wellings Capital, has done is we're putting together funds that invest in these three asset classes. These asset classes, again, are mobile home parks or manufactured home communities, self-storage, and multifamily. And we're looking for value-add assets We have a growth fund. This is my strategy for 2019. We have a growth fund that's all about appreciation. We're looking for steep value adds. We're looking for ground up construction. We're looking for opportunities to invest with great operators who have been around through the last recession or 2 or 3 recessions. We're vetting operators. We've vetted these great asset classes I already mentioned, and we're also vetting geography. We're looking for a diversification of geography. What happens in California might be different from what happens in Boise, which might be different from what happens in Virginia Beach. So we're looking for operators who have a variety of assets in a variety of locations. So we're trying to diversify geographically by operator, by asset class, and obviously by asset. We don't want to put all our eggs in one basket. So last night, over the last 10 days, ending last night, we raised just almost $2 million from accredited investors to invest in a portfolio that already consists of 19 self-storage facilities and mobile home parks. So we're investing with this group. We expect the tax benefits are amazing. I could go into deep dive on why the taxes are so great, but I'll tell you that we've got a president right now who likes commercial real estate. And honestly, Congress likes commercial real estate, and they've given us tax benefits that are they're jaw-dropping. And you know the 1031 exchange, they almost took it away. They took it away for cars, jets, trucks. They didn't take it away for real estate. Guys, we got to love real estate, and if you love real estate, you are in the right place. So thank you for joining, and we're going to take some questions in a minute. But again, today I want to talk about my real estate investing strategy for 2019. Now, why did we do a fund? We did a fund because we want to invest with these operators who have thrived or at least survived during the last recession, who understand where we are in this cycle. They don't have a crystal ball. Hey, those who live by a crystal ball are destined to eat glass, and we don't want to do that. But we are wary of the potential. We're aware of the potential for another downturn, and so our funds are trying to be aware of that potential. So we have one fund, which is the Wellings Growth Fund, and that's all about appreciation, value add, ground up construction. We have a second fund, and this is where we raised the almost $2 million for the last few weeks, and that is it's called the Wellings Income Fund, and that is investing in assets that are already producing income, but also have a significant appreciation potential. And so that's the Wellings Income Fund. So there you go. That's my strategy for 2019. My company's Wellings Capital. My book is called The Perfect Investment. And although it's about multifamily, it applies to all kinds of commercial real estate. The principles are the same. There are 7 ways to get into self-storage, mobile home parks, and multifamily. And so if anybody asks and is really interested, go ahead and ask your questions. I can tell you those 7 ways. It takes a few minutes, so I want to answer your questions. It is now 14 minutes after the hour, and I've used 14 of my 15 minutes to talk about my strategy. I'm going to use the next half hour to answer your questions. So if you're on Facebook Live, fire away. Nicole says, what do you mean by the term operator? Okay, so my fund does not operate these assets. Great question. We are not getting in. We're not the property manager. We're not getting in there and owning these, taking on the debt. We are funding operators who do. An analogy would be Warren Buffett. Warren Buffett does not build ground up companies. He invests in great other companies. He tried that. He had a couple runs early on in his career in the 50s where he tried to be an operator, and he decided, I don't want to be an operator. I want to invest in great operators. And so that's what Wellings Capital is doing this year. My strategy is to invest semi-passively with these great operators. I say semi-passively because we are getting involved. We are going out on due diligence. We are analyzing the numbers. We are looking at the debt. We are, I won't say we're advising these operators because we're investing with operators who are so good that they really don't need my advice. We do throw in some occasional advice. I've been on 2 due diligence trips in 2 weeks with operators, And, we had some thoughts along the way. We gave them some marketing thoughts and tips. I own a company called smithmountainhomes.com as well, where we have a lot of, we advertise and we provide leads for realtors in Smith Mountain Lake, Virginia. So, all right, I see some of you are actually answering others' questions, especially on the YouTube side. I love it. Guys, many of you on here, everybody on here knows a lot of stuff that I don't know. And so please keep answering each other's questions. That will, you'll get better answers from somebody who's an expert in all these areas. And I know some stuff, but you guys know a lot that I don't know. So thank you. Matt Smith says, what's the ROI on storage units? Is there a sweet spot on how many units to own? Matt, I think the sweet spot is 300 or so units, maybe 30,000 square feet of self-storage or more. We're looking for self-storage that's in an area, to invest in an area where there's less than about 7 square feet of storage per person in any given radius, say 3 or 4 miles typically. I was in Nashville, Tennessee this week, and we're about to invest in a ground-up construction that has 0.7 square feet of storage in a 4-mile radius of 0.7 square feet of climate-controlled storage per person in that radius. And there's 1,500 brand new high-end homes being built right down the street, and there's nobody else coming in because the Planning and Zoning Commission is so strict. That could be a home run. There's about 3 square feet of self-storage in that area of non-climate controlled. So we're looking for high visibility, highly traveled roads, low square feet of self-storage per person. 30,000 square feet or more will give you a chance to have an on-site person. I know there's kiosks out there. I know there's automated stuff. I know you can use your iPhone to open your units, and that's all great. And we love all that technology, but you need a real person too, because there's marketing to be done. There's U-Hauls to be rented. There's all kinds of ancillary income that can only be generated through a live person on site. So Matt, that's a long answer to your question. Somebody asked the ROI on storage units. Actually, Matt asked that as well. Typical ROI, we're looking for a steep value add or ground up construction that might have very little cash on cash return for say 3 years, and then be able to double or triple the investor's equity in about year 3 or 4. And it's very easy to see how that can be done. It sounds unbelievable, but in our growth fund, we just invested with an operator who has a 70.1% annual return for the last 19 projects they've done and gone full cycle with. Okay, and that's documented, so I can say it publicly because it's in our documents. So we're predicting a 19% total annual return. And like I said, we're investing with operators who have had much, much higher returns than that. Let's all be honest though, we've been on an incredible run, and I don't think things will continue to go at the pace they are. And that's one of the reasons we're investing in value add, because value add and ground up construction, but value add especially, offsets some of the potential downside if there's a downturn in the economy. Michael says, what's the average rent for self-storage nationwide per 100 square feet or similar? So yeah, 10 by 10 unit is the kind of standard look that they look at when they look at average rent, 10 by 10, 100 square feet. And in a lot of markets, it's about $1.50 or $1.75. The markets we're looking at have $1.76 up to $2.20 per square foot in a 10 by 10. But that's not the point. Whether it's $1 a square foot, $2 a square foot, the question is, can you add significant value to a mom and pop operation and bring significant equity to your investors? Do you know if you can make small changes in commercial real estate, they're levered by the cap rate and they're leveraged by debt, and it can make a significant difference in the bottom line. I won't go through the math right now unless somebody begs me to, but $1 change in monthly bottom line can result in $200 change to the value of that facility. So think about adding U-Haul, where you can add $1,000 to $2,000 to even $3,000 a month in income to a facility. multiply that by the 200x multiple in change in value. And that's at the value of the asset level. Divide that by 40%. I'm doing the math, aren't I? And you get a 2.5 times effect on that even. It is stunning. Commercial real estate, great place to be. Ito says, how important is the location with mobile home parks? Not that important. I don't see many available around metro areas, usually far out in the country. Of course, it's important to have a location that's not way out in the sticks and there's no demand for. But unlike multifamily, which I love, mobile home parks can be in a lot more remote locations, small towns, places like Lancaster, Ohio. It's 20 miles south of Columbus. I was there last week. There's a wonderful mobile home park that we are investing in next week. It has 340 spaces. About 20 or 30, I think, are empty. Filling up those spaces is going to add about $350 a month times the 30 once they're full, times 12 months to the income. And it's very little increase in cost to fill up those slots. You divide that by the cap rate of about 6%, and you're talking about potentially couple $1 million in increase in value. Multiply that by the leverage that the debt brings, and you're talking about an opportunity to take, let's say, $4 million in equity and change it into maybe $7 million in equity. That's about 75% return on investment for the investors. There's all kinds of things like that can be done in mobile home parks and self-storage. Love it. Multifamily, similar if you can find a good deal. Brian says, good morning from Kirkland, Washington. Value add, love it. Yes, thanks, Brian. Okay, I am going to try to answer some questions on the YouTube side. And I know that some people thought that this session was earlier. So I don't know why some of you were on here earlier, and I really want to apologize on our behalf. I'm not sure if some people thought that this session was going to be earlier. So Brent says, yeah, thank you for answering, Nick Miller. Great answer. Okay, I was planning on an FHA loan, 3.5%, so I can leverage more of my money. That's good. Great. All right. So Vinny, Bill Murray, yes. Hey, Cheesy Buff in Seoul, South Korea. Thank you for joining us. Looking to invest more in the U.S. All right. Someone says they're selling a Victorian, Tennessee. Olympian Mountains, please help me. I need a deal in Queens or Yonkers. I have a buyer. Okay, if anybody has a buyer or a seller in Queens or Yonkers, look, it sounds like there must be good demand there. Okay, so Matt Smith says, I plan on doing seller financed wraps when the market turns. Do you see anything negative about being a note holder? No, I don't. I think it's great. If you have a great operator that can help you walk that note through, Dave Van Horn, PPR Notes, he actually has notes and he operates. In other words, he manages those notes on behalf of investors. They get a great return, and Dave manages those. I believe they have something like a 93%, 95% turnaround in their bad notes that they can turn into good notes. So, hey, Freddie from Indonesia, Gustavo from Spain, Grass Valley, California, Mr. F-Base. Okay, Olympic Mountains, do you say, so you're saying that if you buy a mobile home, you can depreciate $1.4 million, or is it self-storage? Okay, I was talking about depreciation on a mobile home park. What I was saying is if you buy a mobile home park for $2 million, typically 30% is the value of the land, which cannot be depreciated. 35% is the value of the land improvements like sidewalks, parking lots, gravel, roads, lighting, utilities, water, sewer, hookups. Okay, 35% is that. And then get this, 35% is goodwill. Goodwill, 35% for goodwill plus 35% for the land improvements. That's 70% that can be depreciated over straight line 15-year depreciation. If you do the math on that, that's 70% times divided by 15 years, that's 4.66% that can be of income that can be wiped out by depreciation every year. In other words, you will theoretically have zero tax on your K1 if you make 4.66% income. But what if you make 9% income? That's almost double the 4.6. Good news. If you leverage that, if you have like 60% loan to value debt on that mobile home park, that 4.6% is divided by 0.40. I know I'm doing a lot of math here in my head. And that's 11.66% of income that will be zeroed out, if you will, by depreciation every year for 15 years. But what I also said is the new tax plan allows you to depreciate all that in year one and carry it forward. Now, I'm not a tax professional. I don't play one on TV or on Bigger Pockets Live. So I'm going to move on. But self-storage also has great tax benefits, and so does multifamily. But mobile home parks shocked me. I got to say, it shocked me, Olympian Mountains. So I hope that makes sense. Reach out to me later if it doesn't. Mo Samori says, with where the market is heading, would you recommend a first-time real estate investor to buy his first rental property or wait for the inevitable downturn? If you can save up cash and wait, I think you'd be thinking more like Buffett. I don't want to discourage anyone from investing in real estate. I just don't want to see you get burned either, because there is a lot of overpriced multifamily out there. Duplexes, fourplexes, 400plexes, highly overpriced. Very hard for even professionals to find a deal that makes sense. So that's why I love the fragmented markets of mobile home parks and self-storage. A huge percentage of those owners are mom and pops or independent operators, and those facilities can be acquired and significantly improved. Where multifamily, it's very hard to do that right now. Okay, so John L. Irvin, thank you for joining us. Do you think having a real estate lawyer on retainer is an extra cost worth having? It depends what business you're in. I had an attorney in a different business actually on retainer. I think I paid him a couple $100 a month for years, and I used them a few times. But boy, if I would have needed them, it would have been well worth it. I would say if you're far enough along that you're going to use them regularly and it makes sense and you can make the math make sense, it would be something to consider. Great question. Anvith Amin, would you recommend a newbie to get into this current market? I would say consider getting in passively. I love passive real estate investing. Here's my little motto that somebody in Switzerland taught me. Why work harder than you have to make less than you could? Now, I don't want to discourage all you guys who are getting into single family or multifamily and all that, but sometimes you'll end up working harder than you need to and not making nearly as much as you should and could through passive investing with an expert operator. That's what I'm doing right now. I am trying to invest with expert operators who have had decades of experience. One of the teams we're investing with has 5 people who have been with the company over 33 years and up to 42 years. Now, those guys have worked as a team that long. They know what they're doing, and I want to invest with people like that. And so our fund is semi-passively investing, allowing our investors to keep their day job, enjoy life, still be in real estate, and earn very significant returns. So that's my real estate investing strategy for 2019. Hello, Peggy Lou. Is there a rule of thumb for the size of mobile home parks? Is it better to shoot for over 50 units or does it matter? Peggy, I don't know. It depends what scale you're on. It depends. You're going to want to get a full-time an operator there. You're going to want to get somebody in the park who can manage the park. There is, for a commercial level where you can get really good financing on your mobile home park, there probably is a level that you'd want to be at. And I don't have the answer to that, but if anybody else does, I would please let us know. Chris Allen says, is there a good calculator for commercial property, especially multifamily, or someone that can help review and analyze? Yes, Chris. His name is Michael Blank, B-L-A-N-K. He's big on Bigger Pockets, and that's where I heard about him first. Michael Blank, go to themichaelblank.com, I think, or just Google his name. If you Google apartment investing, he'll be on the first page. He's got a multifamily calculator that I believe costs, I don't know, maybe $100, maybe less, maybe around there. And he will give you all the information you need. I don't get paid from this endorsement, but Michael, if you're out there, just remember me. I'm kidding. Mark says, what are the pros and cons of out-of-state real estate? As a first-time investor, how much cash would I need for a down payment for a single-family home? Mark, out-of-state real estate, spend the money to go fly there, see it yourself, do a 1-3-5 analysis, which is driving around the 1 mile radius, the 3 mile radius, the 5 mile radius. Take a day to do that. Get out of your car, ask a lot of questions, see if the area is really gentrifying, getting better or getting worse. Almost a lot of areas are getting better these days. Don't take a chance. Just because another area a mile from there is getting better, don't take a chance that it might not come your way. Your area might be getting all the people that are run out of that area, okay? Look at the current trends, current gentrification, which means just an improvement in an area, and don't count on future improvements. If you're investing out of state, get a fantastic property manager. Check their references. There have been some, if you go around BiggerPockets, there have been some major blow-ups from people investing out of state. And it's been really sad. Some of those people have come to me and invested with me, and they're really bummed that they lost money investing out of state. That said, I invest out of state, and I would do it. Just do it right. Remember, the area, the exact location, the city, and the property manager you pick are going to be about 2/3 of your success as a multifamily passive or active investor. Okay, I'm going to kick into hyperdrive here. We've only got 15 or 20 minutes left, so I'm going to answer these questions shorter. So Chris says, or Jared says, is mobile home park managing more difficult than single family home or multifamily? No, it should be easier. There's actually so much less to go wrong. There's no toilets. There's no bedrooms. You don't buy the mobile homes, you just buy the mobile home park. Okay, so it's predictable. The percentage of capital is only about 3 to 4%. Percentage of money you have to outlay on capital expenditures every year, 3 to 4% of gross revenue. It's a much easier business. However, if you set it up right, you'll be smart. For example, find out what every tenant's pay schedule is. If they're on bi-weekly, get their rent ACH'd out of their bank account, with their agreement, of course, bi-weekly. If they get paid weekly, take it out weekly. It'll dramatically improve your collections, and it'll dramatically decrease the evictions. It'll dramatically increase your payment cycle, the payment on time. I know a guy who added this feature after 9 years of pulling his hair out with late payments and evictions. He hasn't had one late payment or eviction in 5 years since then. He's a small operator, but it works. ACH, Automated Clearinghouse. Check it out. And it's not expensive, well worth it. Whatever you're doing, single family, multifamily, self-storage, mobile home parks, use the ACH. Highly recommended. Use it on their pay schedule. If they get paid monthly, then take it out monthly, a few days after their payment. They won't miss it. They'll be paying on time. Everybody will be happy. It's good for them too, because it helps build their credit from paying on time every month. You can use a third-party service that actually reports to the credit bureau and help them build their credit. That's a freebie, guys and gals, for everybody, whatever business you're in. Use the ACH. Chris, yes, Mark. Okay, great. All right. So, Maricruz Romero. I'm from New York City. Romero. Sorry, I tried. Sorry, Maricruz. I'm from New York City and planning on starting to invest long distance. Do you have any recommendations of markets I should consider in 2019? Go to Green Street Advisors and see what they say. See what markets they like. Check CBRE. I think his name's Richard Barkham. He puts out some reports. I don't know, but anybody who wants to try to answer Maricruz can do so. I know there's a lot of overheated markets right now. Even my small town here, Lynchburg, Roanoke, Virginia, highly overheated. Okay. Jonelle Irvin says, where would you look to find these mobile home parks for sale? I don't know. You can look on LoopNet, but if you're an executive with LoopNet, I apologize, but LoopNet is a commercial real estate MLS, and honestly, it's a lot of places they couldn't find a buyer for elsewhere end up on LoopNet. Go to brokers, go to your local regular MLS, drive around, drive around, get to know some of these operators. You can do a postcard mailing campaign. You can get their cell numbers and call them. Go if you can find 10 mobile home parks in your area, just keep driving through there, getting to know the managers, keep leaving your card, send them a nice personal letter, maybe even FedEx them a handwritten letter telling them why you are the person that wants to buy their mobile home park. Remember, I'm investing passively in these. I'm investing with operators who have all these systems set up, sometimes for decades already. Trailer Park Cash by Jamie Smith. I think it's called Trailer Cash, actually. Trailer Cash by Jamie Smith. She's got a lot of good ideas in there if you want to learn to do mobile home park investing. Jamie and Ryan are friends. They're in Orlando. They've got an amazing mobile home park investing business. In fact, we're investing in about 19 of their self-storage facilities and mobile home parks in the next week or two. That's my strategy for 2019. Number one, do I need to have an LLC registered in the state where I plan to buy rental property? No, we only register our LLC in Delaware, and we buy and we invest all over the place. Kindrel, I'm not sure I understand your question, so you might want to ask that again. I might have missed an earlier part. Hey, Chris from Kansas. Mo says, I live in Metro Detroit. Hey, shout out to Metro Detroit. You guys are on the rise. Properties are cheap. Economy is slow and getting better. Slowly getting better. I believe there's a lot of potential in real estate investing throughout the surrounding cities in Detroit. Yeah, there probably is. Oakland County and Wayne County is a little bit behind Oakland County. And so if you can get into there or get out there towards Brighton, Howell, out there towards Ann Arbor, those are great locations. They're probably, Oakland County is pretty maxed out right now, but if you can get into Wayne County, there were 16,000 abandoned buildings and homes there at one point several years ago. And a lot of Asian investors are buying these up, and they are real smart, trust me. So that might be a great place to look at investing. GM Transportation says, in which city in the country would you recommend to buy a multifamily unit? I would love to give you an answer, but I can't find one. I cannot find one place in the U.S., even small towns. They're overpriced right now. I wrote a book called The Perfect Investment. The perfect investment's no longer perfect if you can't find a deal that makes sense. The problem is people from all around the world, 1031 exchange investors, institutional investors, self-directed IRA investors, foreign investors are all investing in multifamily. And there are some sleazy operators out there who are trying to sell people on overpaying for multifamily just so they can make a brokerage commission or an asset management fee. Don't fall prey. Don't fall prey. All right. So somebody says, Nick says, is Alabama a good market to invest? Huntsville's booming, folks. I just spent the day with Chris, a friend of mine from Huntsville, and he was telling me about all the different businesses who are coming into Huntsville right now. Columbus, Ohio, great place to invest, says Jamar. I agree. Dude Real Estate says, Mo, I'm not familiar with the market there. Oh, I shouldn't read halfway through. Dude Real Estate says, Nick, I don't have any property there. I know it's a great location. Oh, yeah, Airbnb or VRBO. Y'all, Airbnb right now, there's going to come a day when it probably all equalizes because that's what happens in capitalistic economies. But Airbnb is a great place to invest. A great business strategy right now. I've got a guy who can teach people to do Airbnb and long-term rentals. I highly recommend it. Do you have to live in the house to qualify for FHA? As far as I know, I believe you have to be live there for at least a year. So if it's a duplex, you can live in half of it. Fourplex, you can live in. Why would I even say that? One of them. You don't have to live in 2 or 4 of them. That makes no sense anyway. Bree Cool says, as my first property, would it be better to buy a $300,000 single family home or a fourplex at $300,000? I would recommend a fourplex, and you get a little diversification. You get 4 tenants, and especially for some value add, if you can fix it up and increase the rent, I would do a fourplex. I'd love to hear from others of you who may disagree. I bought a fourplex about 14 years ago, and it turned out well. Jamar Mills says yes. Okay, I'm not going to answer someone else who's answering someone else. Okay, 100% Jamar says Columbus, Ohio. Columbus, Ohio is great. The northern suburbs like Dublin and the southern suburbs like German Village, Whitehall, some of those areas, Pickerington, those areas are all exploding, not just around High Street, around the campus of Ohio State. So yeah, I love Columbus. I recommend it. Like I said, I was there in Lancaster, Ohio last week. You're probably thinking, why didn't he say Lancaster? It's actually Lancaster. That's what the local people say. So I'm just going to be like the local here. Okay. Nick says, I live in Idaho and plan on investing in Alabama. Alabama's going crazy. Now, Mobile is getting some ports, and Birmingham is getting some new businesses as well, but they're not really taking off at the level people thought they would. Huntsville is. Huntsville's about an hour and a half south of Nashville. They're getting, I believe it's Nissan and some other large employers, and they've got a lot of government jobs there with the space program. Huntsville is going nutso. So, Chris agrees. Thanks, Chris. Matt says, sell this spring, probably won't see prices this high again for a long time. I agree. Matt Smith, thank you. Okay, how about Camden, New Jersey or Chester, PA? I don't know. Can someone else comment on that? I've heard good things about it. Our fund managers are there. I should ask them. Dude Real says another good tertiary market is southern Wisconsin. Affordable, low taxes, good job market, lots of people, Illinois people moving there. Yeah, the southern border of Wisconsin, they're getting a large, I believe it's an Asian company that is getting, going to be having a huge amount of job growth there on the southern border of Wisconsin. So I think that might be a good place to do some rental property, especially with all the people coming in there. I would do, with all the construction workers coming in the next few years building these factories, I would highly recommend doing long-term corporate rentals on the southern Wisconsin border, or maybe the northern Illinois border. What about Zion, Illinois, right around there, or southern Wisconsin, right around there? Highly recommend it. Any cities or counties in California to invest in? Thanks for your help and direction. My daughter lives in Redding, California. She's part of Bethel there. And, she's always been able to find a place to rent, which has always surprised me because Bethel has thousands of people coming there for their school. And there's always places to rent. So that would have been a place I would have considered, but I don't know. Anybody else want to weigh in on California? It seems to me Sacramento's had an incredible run. They were the fastest growing rent market in the U.S. in 2018 with, I believe their rent increases were 9.9%, 9.3% on average, which is incredible. Sacramento has a lot of people moving an hour and a half, from the Bay Area over to Sacramento. And so it's booming, but will it continue? I don't know. Anthony says, I'm in upstate New York. Should I buy a property for $39,000 and build my first house and rent it out? Well, if you can buy a lot for $39,000 and you've got all the septic, well, driveway, water, sewer hookups, etc., all dialed in, you can do the numbers and figure that out. Bigger Pockets Pro members get access to all kinds of calculators and forms and other things that will allow you to make those calculations. Joining Bigger Pockets and then becoming a pro member was the best thing I did ever in my 26 years as an entrepreneur and a real estate investor. So Milwaukee, Wisconsin, Ridley, I've heard good things about it, but I don't have any personal knowledge of it. Estelle says, how about opportunity zones? Opportunity zones are a great way to go, and there's all kinds of benefits. I won't get into it for time's sake, but if you check out opportunity zones, some of the opportunity zones are really good areas, and it's almost laughable how well those investments work. And so opportunity zones are part of the new tax law that was signed into effect in December of 2017. Check it out. If you're investing passively, it's a great place. You can actually roll the profits from stocks, bonds, mutual funds. If you want to get out of those without paying a huge capital gains and into real estate, opportunity zones are a great way to go. Shep says, how do you find that kind of data? Where's the fastest growing rental area, etc.? Green Street Advisors, check that. CBRE, Marcus and Millichap. There's also some base level information you can find by checking the U.S. Census Bureau, and also, you might write this down, Texas A&M Real Estate Center. I believe it's called tamrecenter.com, but you can check that out. Just Google Texas A&M. They have incredible real estate statistics, and you would do well by checking those out. Texas A&M Real Estate Center. Becky Branson, hello. What about Tulsa, Oklahoma for single family? Can someone else answer Becky? I don't know. Caleb VW says parents made bank on their house 1 mile from Bethel. Yeah, I believe it. So Nick Miller says, hey, Paul, so you're saying that's a good time to invest in Huntsville and Mobile? Mobile has just been kind of disappointing as far as I can tell, as far as job growth, even though they're getting that major port. Huntsville is exploding. The problem is lots and lots of people already know that. So if lots of people know it, it's already perhaps reached its equilibrium or maybe been overpriced. But Huntsville seems to be pretty amazing. Yeah, Nick, Texas A&M Real Estate Center. That's a place to go for a lot of information. They've got a great real estate program. So, been in a cave way too long. Wish the groundhog would have stayed in the cave today. You know, he saw his shadow, at least here in Virginia. 6 more weeks of winter. Should I unload my beach condo now? Well, I shouldn't say heck yeah, because you may enjoy it. Your family may make great memories there. But I'd say, it seems to me like we're top of market. But I thought that in 2014 and 15 and 16 and 7. So I didn't buy. And you know what? The market's gone way up since then. Michael Blank, who I mentioned earlier, Blank, he invested in a property in Memphis, Country View Apartments, bought it for $6.8 million. He's refinancing it now. A little over a year later, the value is $14 million. He hit a home run. All the investors are going to, as far as I know, are going to get all their equity back and hold on to their ownership. That was a home run. I thought he was crazy for investing in Memphis at the top of the market, but he hit a home run. My hat's off to Michael and Drew Niffen, who are killing it. If you guys want to get real estate investing, multifamily investing, mentorship, there's lots of great places to go. Michael Blank is one of those. And there's lots of other great ones as well. So is this equation solid, says Akios Salisbury. I derived it from the math scribbles on a Morris Invest video. They were lumping all costs into 40% of rent each month, which I resolved as 7.2 equals ROI. Akios, if you want to reach out to me personally, I'll try to answer that later. I don't know if I understand it. Andrew Anger. I know a guy named Bob Anger. He's a great guy. He's a lawyer who invests in the Bakken of North Dakota. I don't know if you're related. Not sure if Dayton, Ohio was mentioned as a good place to invest. Does anyone have input? Dayton, Ohio was pretty bad when I checked it about 4 years ago. But I know a lot of people investing there, including somebody I just talked to from California who says it's a good place to invest. Now, if the prices are low and you can find great deals, think about it. That might mean it's not a great place to invest. And if you're from Dayton, I'm sorry. But Andrew, I mean, I don't know. If there's great deals in this hot market, please put on your thinking caps and think, is there a reason there are great deals? Because maybe, Dayton's a large city. Maybe it's just not a great place to invest. Check out some things on the Real Estate Center, the census.gov website, the employment websites for the U.S. government, Bureau of Labor Statistics. That's what I was trying to say. Look at the job growth. Look at net population migration, which averages 0.8 in the U.S. I'll call it 1% U.S. national average. If the net population migration is like Austin, where it's like 3% per year, that's 3 times the national average. That's really good. If Dayton, I'm not saying it is, but if Dayton or Buffalo or places like that have a, 0.9% net population migration, that's good because it's more than zero. That means people are, there's more people moving in than out. But compare it to the national average, or compare it to places like Austin, Nashville, which is exploding, Atlanta, places where people are moving to. You don't want to get a great deal in a place where people are moving out of. And years ago, we checked Dayton, we checked Buffalo, places like that. No matter how great of a deal it is, if people are moving out, if your customers are leaving, it's probably not going to be a great long-term investment. And that's, folks, why I love mobile home parks, because people are moving in and the supply is diminishing. So pretty amazing. Adam, hi, Paul, should you rent your first house or sell it? If you can rent it out and make a significant profit, I would rent it, refinance it, take that money and move on. So you've heard of the BRRRR strategy, which is real popular on Bigger Pockets. Brandon Turner and others made it popular. Try it out. Someone says, I'm in Dayton, great deals. Okay, Chris, I hope I didn't offend you. Thanks for the input. Dayton has seen new high-quality apartments and businesses moving into downtown in the last year. That's great. Okay. So any thoughts on investing in Philadelphia? There's been a lot of developing here, both single and multifamily, says Michael Robinson. I've heard good things about it, and I think Dayton seems like a decent market. Jamar Mills says, when people already know what market is trending after a certain time, it's reached its peak, and it's time to jump on to another market. Yeah, that's what Warren Buffett would say. And I have to agree that that is a good way to go. So I've got quite a few questions on the Bigger Pockets side. Joe Neal says, great ideas. I'm in the South, so the personal touch helps. Okay. Trailercash.com. Okay, there you go. www.trailercash.com. You've heard the term trailer trash. I would never, ever use that term, and I hope none of you would, about a fellow human being as well. We want to respect the sanctity of all life, and anybody who lives there's a lot of wealthy people actually who live in mobile home parks by choice, and they save that money up to save it for college for their kids, or so they don't have to work 2 jobs and they can have a quality life, or like the retired successful doctor I know from Southern California chose to move to a trailer park so he could have a better quality of life in his later years. So trailercash.com. Okay, Dayton, John Hassan Crutchfield says, what about Fort Worth? Great market. There's some rumors that Dallas-Fort Worth area is getting a little overbuilt, though. Miguel Intencion says, great time to buy since the bull, or wait for a bear run. A lot of people think it's time to wait for the bear to come back, and there's some signs that it is happening. That's what Buffett would say. Ron Black says, how about the Denver Aurora market? It's going incredible, although time on the market in Denver is increasing, so I think it's slowing down just like California right now. Perky Beans 08 says, mobile home properties. All right. Perky, if you can ask the question again, I'm sorry I didn't catch it. Joseph Henson says, profit, money, better life at quickcloserealestate.com. And loving life right now. Awesome. I'm glad you're loving life. Are you loving Groundhog Day where you are? It's Groundhog Day here, and when you watch this, the groundhog will have long gone back into his hole, but winter is still here for 6 more weeks. And if you're like a lot of us, we're ready for spring. Chris says, any thoughts on Bethel, PA? Anybody got any thoughts on Bethel, PA? I don't. Been in a cave way too long says, what about the Atlanta Midtown condo market? There's been a huge construction of high-rise apartments, thousands and thousands of units. Should I unload my Midtown Atlanta condo? Here's the question. Can you find another place to invest will have a better ROI? and where you can get a better deal, I would say if you can get into a passive investment like self-storage or mobile home parks, you may have way more upside than your Atlanta Midtown condo right now. I can't really say for sure. That's something to consider, though. JK says, how about St. Louis? St. Louis County, I feel things will improve in the next 5 to 10 years. The problem is, it may or may not improve. And so I've heard mixed things about St. Louis. Not sure anybody else can weigh in. Brian says, Michael Robinson, bro, Detroit is in the same trend. Check out this website, buildingdetroit.org. Z Kaon says, looking for first house hack in Fort Worth on FHA. Feels overbuilt, but I feel like the cash flow will help prepare me for the downturn if I can find it. My son, Jonathan, who's an amazing real estate investor in his own right, he spent weeks driving around when he wanted to get into house flipping, and he found about 20 or 30 potential house flips that you wouldn't have found just looking online. You wouldn't have found them on the MLS. You wouldn't have found them on Google Earth or Google Maps. And Jonathan drove around, found these potential house flips. He was looking for grass that was high, shutters or curtains that were drawn, just a general look of disrepair. He found 20 in just a few weeks, if I remember right. And he was able to identify those as potential people to start to approach to find his first flip. And I highly recommend the driving around method if you're trying to get into this for the first time. Perky Bean says, true or false, mobile home parks hurt the property values of single family homes around it. A lot of mobile home parks in my area are an eyesore, gives me concerns about crime rates. Yeah, I think that's definitely a concern. We are investing in nicer mobile home parks. I'd love to show you pictures, but I can't right now. Akeo says, my buddy bought a trailer house cheap. We remodeled it twice. We didn't charge the tenant a dime. He always pays. Total costs are maybe $12,000. The rent's $450. Good stuff. Okay, I am not personally recommending investing in mobile homes, just mobile home parks. I've done 4 mobile homes. 3 were a disaster. Absolute disasters. Now, if you have the courage and the property management skills and the ability to stay on top of these tenants and the screening, and you use ACH to take their payments, you might be able to make it work. Get a big down payment, though, and get them invested. Don't just get a renter, get a potential rent-to-owner, and that will help you a lot. Even then, mobile home parks are tough. Mobile homes are tough. Mobile home parks are awesome. So, lots of new questions coming in. Somebody asked me about Charlotte, North Carolina. I love it. Love Charlotte, North Carolina. It is possibly overbuilt, though. A self-storage unit I just heard about was built for $9 million. A couple years into it, the buyer realized it was only going to be worth $6.5 million when it was fully rented. So he turned the keys back into the bank. Folks, just because I love self-storage and mobile home parks and multifamily doesn't mean you should buy any one you see. Be very, very careful on the location, the competition. You can buy wrong. You can buy the right asset in the wrong market and be a mess. Okay, in 2 minutes, we're going to stop no matter what. So what do you think of flipping a 2-2.5 duplex? Love it. Jamar says in Philadelphia, colleges are buying property. Okay, that's awesome. Nori says, thank you, I'm new. Hey, welcome, Nori. You're in the right place if you're in bigger pockets. Jim says, okay. Ron says, Angela East, what market are you in Ohio? Whiteboard Finance says, stocks and real estate. I'm a big fan of the channel. The Midwest has incredible value for life and investing. Tucson, Arizona. I don't know about it, but I've heard good things. What would you buy a 28-lot mobile home park with great upside 2 hours away? Maybe, if you can find a fantastic manager. Stocks and real estate, Cleveland, Ohio, checking in. Hey, Cleveland. All right. So I'm going to end up here. It is Groundhog Day, and I've got to go continue the celebration. I'm being a little tongue-in-cheek. My wife and I already watched the movie this morning at midnight. And so hope you all have a wonderful weekend. It's been great being with you here at Bigger Pockets. Stay tuned to Bigger Pockets for the best real estate investing advice, commercial, residential, self-storage, mobile home parks. Hey, check out medical offices. If you haven't done that, medical offices are going to continue to boom. And I haven't personally invested in medical office space, but it's something you might want to consider. If you're at BiggerPockets, join BiggerPockets Pro. It's the best way to get the most value from BiggerPockets. It's a little bit of money, but you get discounts on all kinds of things. You get free forms, and I'm talking about really, really nice forms for renting, for buying. All 50 states are covered. Check out BiggerPockets Pro today. Get your membership. Join me in making the best decision I've ever made as a real estate or other investor. And please join me again at BiggerPockets Live, Facebook Live, and YouTube Live. We'll see you next time. Happy Groundhog Day. Happy weekend.